Welcome to the big story. I'm Tamanna Inamdar. Paytm founder Vijay Shekhar Sharma is no stranger to challenges, struggles and controversies. But the events of the last week may be the biggest hurdle the 45-year-old may have faced. In a matter of week, the RBI has pretty much put paid to his payments bank. The lapses in operations are raising concerns of money laundering, and trader associations are calling out for their members to move away from the Paytm Payments app. While a clutch of startup founders have tried to paint this as a heavy-handed regulator coming down on an innovative company, is that all there is to the story? Are we seeing some startup founders believing that they're above the rules? I mean, just think about it. A few years ago, some of these names were the most feted in the space. And if I talk about Vijay Shekhar Sharma, I talk about Baiju Ravindran, I talk about Nashneer Grover. Today, there are questions being raised on what they have done. So that's what we're going to explore on the show today, what really is happening in the startup space and more. But let me bring in my colleague Pragati also very quickly, who's joining us for a comprehensive timeline on the chain of events that have engulfed Paytm. Pragati, can you hear me?
Yes, Tamanna, I can hear you.
All right. Let's begin by talking about the Paytm story and what we've seen in the last few days. Now, I want to understand what the response has been from Paytm. They've had an investor call. There have been a bunch of news reports and an exclusive story NDTV Profit has done. It's seeming more than very perfunctory KYC lapses, isn't it?
You're right, Tamanna. So that's what. So what the management is saying and what is coming out is now at present becoming a situation of management coming up and covering up a lot of things. So I'm going to quickly take our viewers to the timeline of the entire incident as to what has happened. RBI had clamped down on Paytm Payments Bank on 31st January, one day before the presentation of the union budget. So naturally, which was already a very big event, all eyes went towards Paytm Payments Bank. So RBI said that anyway there were some sort of curbs on Paytm Payments Bank. They were not allowed to onboard customers since March 2022, and now because of this additional stringent curbs, Paytm Payments Bank was asked to stop deposits or credit transactions in customer accounts and stop banking services apart from withdrawal or utilization of balances. And for all this, Paytm Payments Bank was given a deadline of February 29. That is, after this deadline, Paytm Payments Bank cannot indulge in any of these activities. Right after this, on 1st February, NDTV Profit, our team gave an exclusive that RBI's move was in reality in preparation for a license cancellation of Paytm Payments Bank, which was a big exclusive story that we got from our sources. And right at that time, on the same day, the management also addressed everyone through an analyst call saying that all was well at Paytm, and Paytm or like 197 Communication, the parent company, and Paytm Payments Bank are separate entities, that there was an arm's length distance being maintained in both the between both the companies. Very interesting bit here, because there were a lot of operational changes coming up at Paytm or 197 Communications. The management said that for the time being, temporarily, we are stopping the loan giving out process while we try and understand and figure out how to go about this entire thing. Now, soon after that, Vijay Shekhar Sharma also took to X, formerly Twitter, saying that the app is working, or like he said, their favorite app, Paytm, is working. There was nothing to worry about, and that it will continue working after 29th February. So that is what has happened so far. But interestingly, right after that, NDTV Profit came up with another exclusive based on information from sources that why RBI had a clampdown or another clampdown on Paytm Payments Bank was because there were concerns of money laundering as well. So recently on Feb 4th, which is yesterday, 197 Communications also came up with an exchange filing saying that, denying rather any allegations of money laundering.
Sure. So we've had a rocky few days. Now the question is, what are we seeing here? Because initially there was a lot of chatter, a lot of commentary that this is, a regulator coming down very, very hard on the pioneer of the digital payments in India. But is there more to the story? Thank you for that, Pragati. I'm joined now by Ashwin Parekh, MD of Ashwin Parekh Advisory Services, and Amit Gupta, partner at Factorial. Welcome to both of you, and thank you so much for speaking with us. Ashwin Parekh, let me begin, with your take on the entire Paytm saga and what we are seeing right now. keeping in mind that the RBI had already given fair warning in 2022 when they said don't onboard customers. Now, NDTV Profit's own reports and investigations have found cases of, say, over 1,000 accounts linked to one PAN card. Are these not serious concerns?
These are actually, there are two parts to the whole story. One is, when we say non-compliance, I think it's important to understand what aspect of non-compliance, is being observed by the regulator and also by the system. So, if you find that KYC itself, for example, was not conducted, let's say, with a proper order or a proper control, then you have a major problem. And I'll explain why the major problem comes in. Because not only are you encouraging money laundering in some form, because you do not have a good track of those accounts in any case, but also without realizing you would also bring in the problems of security, cyber security as well. Because if these are, let's say, it's purported, if these are Chinese kind of accounts or if there was payments, from out of Chinese kind of accounts, then in that case, there could be several other threats as well. Coming back to the point, let's say, right from the time, let's say, the RBI observed it first, they've been regularly warning the bank and regularly asking the bank to regularize. Non-compliance of order, any order for that matter, is not an acceptable sort of proposition by any regulator. And the extent to which and repetitiveness of which it has been done is certainly not acceptable. So when the clampdown happened and there was also a talk about saying, is the RBI getting a little too harsh on a sort of, on a fintech? And I thought people have to realize that there is a vast difference between the kind of work that, let's say, a particular platform does or a particular bank does, and the non-compliance and the non-compliance record. It's not like one or two occasions. A non-compliance record, people have to distinguish that. Now, in that case, therefore, you're leaving the regulator with no choice. The regulator had to really do what he's done. The good thing is, because it's a systemically important, in terms of the number of customers it has, and in terms of the kind of services that it provides in the payment space, particularly after the demonetization, it really played a significant role. Because of that, the RBI has given a certain period. So up to 29th of February, during which, of course, the bank cannot receive any further amount in the wallet. The customers, however, will not get any pay. They will be enough time to use up their wallets during this period or take the balances to any other bank which provides that wallet or any other platform for that matter. So, there are other platforms available without naming them who are fairly active, who've been doing very good. In fact, to be very honest, some of the platforms have gained a huge amount of market share from out of Paytm. So, I would certainly say, therefore, that the record of non-compliance, particularly KYC, certainly would have brought this kind of an action on the bank.
Now, of course, the distinction being made that this is the Paytm Payments Bank which has faced regulatory action. The rest of the business is there, but that overhang already being seen reputationally. Now, I want to understand a different aspect of the story, and Amit Gupta is joining us for this. Amit, great to speak to you here on NDTV Profit. And
thanks for having me, Sona. Thanks for having me.
And I just want to put this theme together because another startup founder who was once feted, Baiju Ravindran, is also in the news right now. He's finding it difficult to make bank to pay salaries, and we'll pull up all of those names on your screen as well. I'm trying to understand what we're seeing here because some people are trying to paint this as a crackdown on a thriving startup ecosystem. But on the other hand, serious questions being asked on whether celebrity founders are beginning to think that they're above the rules.
Yeah. So, Tamanna, we are a very young ecosystem in terms of startups compared to the Silicon Valley or even China. And for some reason, we've as in the founders have taken to glamour and, we like to idolize or adore these founders. And Vijay, Shekhar, Sharma, or for that matter, Baiju Ravindran, and you took the name of Ashneer Grover. They've all followed different yet very similar trajectories in terms of being looked up by other founders in the ecosystem and all. Different personalities, I would say. Vijay Shekhar Sharma, what you see now, the outpouring of support coming in from the startup community at large, right? I mean, there's barely anyone who's not being supportive of him. And as you rightly said, they're painting it as a clampdown on startups per se, right? Similar thing happened when the GST was applied on real money gaming, and Ashneer came down with that narrative. Startups. So I think somewhere down the line, it's our Indian society and culture to blame, or that's how it is, right? I mean, we like idolization of people. But personally, on Vijay Shekhar Sharma, I think whatever has happened, right, he's had a very storied trajectory in terms of having very humble beginnings compared to other pedigreed founders who come from IITs, IIMs, and so on and so forth, right? He had very humble beginnings growing up in Aligarh, going to a normal college, Delhi College of Engineering. Incidentally, I met him in 2014-15 while I was running an events platform to do a simple cashback deal. So very hands-on operator. Now I get to the point that I'm coming at. That hands-on operator stuff continued for a few years. I mean, he ran it like a single person entity, even though it grew. I met him in his erstwhile office in Noida as well. And I did see the enthusiasm on the floor, but still very hands-on. Now, like Mr. Parak correctly said, see, demonetization changed everything for the company. That front page ad next morning, no matter how it happened, just propelled them into the mainstream thing. And their marketing was on grassroots level. We know Paytm, just like Google, is almost a verb. I mean, it is a verb. No matter which app people are using, it's still like Paytm Karo, right? And there was a well laid out strategy. But Vijay Shekhar Sharma, the individual, never let go of a day-to-day hands-on approach. And that's how his persona grew. So now what's happening currently is we have to differentiate between the individual and the corporate identity. I mean, people refer to it as a startup, but you have to understand it's a listed entity, 197, and Paytm Bank is a subsidiary of that. So in my opinion,
I want to come to you on the point you made about your own interaction with Vijay Shekhar Sharma, and especially after the IPO, because Paytm and VSS himself have gone through quite a journey. Right. It's not just the stock in the company that has been re-rated several times, it's this founder as well. The concerns began with maybe Chinese investments. The concerns have also been about a Chinese wall or an arm's length distance between the bank and the rest of the entity. Now we're learning that maybe some of the operations were too mixed up. Now things like that, why would someone in that position think they could get away with it? I mean, you have some of the largest banks in this country who wouldn't dare to do that.
Right. So again, it's the whole, the rapid trajectory and the rapid growth and how it happened from 2016 to 2019, the period after demonetization, and they really went overboard. I mean, I don't have exact figures, but at least from their own narrative, 30-40 crore people use the app. Now, whether they're using the payments bank or the wallet. The wallet, I know on a grassroots level, including my own domestic helps, use the bank and the wallet. So it's the de facto thing, right? Now, when growth happens at such a rapid pace, and then the IPO, the ill-timed, and I call it ill-timed, and we know why it's ill-timed, right? Apart from the pricing, it was way too soon he did that. Therein comes the Chinese angle, because he wanted to give an exit to the Chinese investors, get rid or at least get them out due to government pressures, geopolitical reasons, and so on and so forth. So those structures and systems that should have been put in a place, that, there's always a gap. We have other startups preparing for an IPO, and there's always a 2.5, 3 year run up to the IPO where they put up all these systems and processes in place to transcend from a startup to a corporate entity. We still refer to it as a startup, which it is not. It's a listed corporate entity, which people forget. It is surprising. There is no answer. Why and how did the management think? He cannot be singularly responsible, even though, he is the CEO, possibly chair of the board as well, but he cannot be singularly responsible. Now, therein lies the difference between a BharatPe, which is not a listed entity, or a Baiju. No matter how much they tried, they are not a listed entity. I think the one thing which has stood out here is, maybe because of compulsions also, is he coming out in the open and at least admitting and that I will take corrective measures? I mean, he has no choice anyhow, right? That is the difference between him and Baiju Ravindran, who's quite defiant every day. It's more like a soap opera happening, right?
No, clearly, I mean, we are giving examples over here. We're not saying they're all in the same boat, and I hope it doesn't go there either. This is a company with a large value. I'm just saying that you shouldn't be too quick to say that it's not your fault and play the victim card. That's the simple point that I'm making. But coming to the point of the IPO, please stay on. I have my colleague Harsh with us, and that's an important sort of pivot point of Paytm's journey, the IPO, the valuation of the IPO, and the entire row that started there. From an investor point of view, Harsh, it's been quite a rocky and disappointing experience, isn't it?
Absolutely, Tamanna. So let me first start off with the IPO itself. It was at IPO, the company was valued at 1.5 lakh crore, 18,500 odd crore IPO, of which 8,500 odd crore was purely the fresh issue. So that was the key. 10,000 crore was investors selling out. And when I'm looking at the price itself, 2150 was the price. Now, important to note here with regard to valuations, because at that point of time, FY21, the sales that Paytm clocked, or the revenue number that Paytm clocked for FY21 was around 3,100 crore, which was the valuation therefore was 45 times sales. It was making a 1,700 crore loss at that point of time in FY21. These are some metrics which are important to understand, because in the RHP also, Paytm had clearly specified that, and I quote, "We have a history of net losses and we may not be able to achieve profitability." Despite that, the IPO was 2x subscribed, and this Paytm story was painted to be a very, very good one. Now, let me quickly also take it to what happened thereafter. The stock obviously did not list anywhere close to IPO price. It slid to the 1,000 rupee mark in January of 2022. It quickly slid to 550 rupees by March of 2022, and therefore you had a significant decline in the stock price, with investors losing nearly 75% for those who had invested at the IPO price. Now, in April thereafter, post this March decline that we saw, the founder came out and gave two clarifications. One, that the company was targeting to be EBITDA profitable. EBITDA, I mean, by EBITDA, I mean EBIT, adjusted EBITDA as they call it, before ESOP cost, profitable in the next 6 quarters. Second guidance, or rather second suggestion he made, was he would not vest his options till the stock hit the IPO price again. That seemed to calm the nerves of investors, but the stock had already tanked by quite a bit, right? So not really sure there. Now what has happened? Where do we stand as of today? Well, the company for the 9-month FY24 has made an EBITDA before ESOP of 450 odd crore.
Right.
The ESOP cost is around 1,100 crore. I'm just going to try and complete this. Restrictions posed by the RBI, the company forecasts an impact of 300 to 500 crore on that, and therefore this would put the company behind by at least a year when it comes to EBITDA before ESOP profitability. And therefore this impact is quite large. What Citi seems to therefore suggest is that a full clarity on the reset will only be realized in the next 1 to 2 quarters. So they are also playing wait and watch. There are too many uncertainties around.
Harsh, I would argue
Sure.
EBITDA to ESOP is the least of their concerns right now.
Sure.
We're talking about it from terms of the numbers and impacts on the payments business. The reputational risk, unfortunately, runs deep. And that's what we have to see. I mean, the company over the weekend has denied reports that there's an ED investigation on, but we'll have to wait and watch that space. Thank you for that, Harsh. But I just want to play out this slice of a conversation we had with Bernstein's Pranav Gundlapalli on what Paytm could do next. Listen in.
I think it's a big blow for them in terms of losing an associate company, and also brings them on par with how most of their peers are structured in this sort of a platform, payment platform business. Right? So I think that edge that they had is definitely gone. I think that the question now is twofold. One is Is this the end of regulatory troubles, or there's more trouble ahead? I think that becomes a bigger question, because one discrepancy then leads to questions on if there are more to come. And the second is if there is a reputational risk which will have rub-off effect on the other parts of their business as well. Remember, the payments bank is only responsible for a small part of the business. So therefore, if it's just limited to that particular business, it's probably not that material in terms of numbers. But the questions of future trouble from regulations and rub-off effect in terms of reputational risk are the bigger ones to be worried about at this stage.
Right, so reputational risk over here is key. Ashwin Parekh, I want to come to you on this, because technically the payments business or the payments bank business could be sort of ring-fenced, and as Vijay Shekhar Sharma has said in all of his calls, he'll try and find other banks to get on board, try to tide over that crisis. Do you think the reputational risk is what the biggest headwind is right now?
Yes, see, let's not forget that Paytm as such, without the bank, is only a platform. Now, it is a regulated platform, because all fintechs, which are B2C fintechs, you have B2B fintechs where the responsibility or the onus of regulatory compliance is with the banks. This is a B2C where they require the customers, they create wallets, and things like those. So there, what may happen is that the regulatory overhang, in terms of irregularities observed in KYC, for example, or irregularities or non-compliance observed in other areas, are they certainly going to look at the platform more closely in that regard as well? There's no doubting that very clearly. The second is from the reputation point of view. See, I suppose when I really go and conduct a payments transaction, after a while, does it matter whether I conduct it on a PhonePe kind of a platform or I conduct it on a UPI platform? There I do believe that the only factor that could work against the person immediately, against the platform, immediately would of course be the reputation hit. But I suppose if the platform continues to offer its services, if it continues to really comply with the regulations, then it's a different story, then they can bounce back, after a while. Non-compliance, on the other hand, is a serious issue. KYC is a serious, so even let's say in a B2C environment, KYC is as critical, because regulator has not made any change in requirements for a bank or for a B2C fintech basically. So there, once again, if there are non-compliances observed, then I suppose the next thing that could perhaps follow is that could be the end of Paytm as well as a platform. The bank, of course, from February 29th, certainly to close down this thing.
So yes, that is the next big risk. And when we keep saying non-compliance and KYC, it's a big deal. Think of it this way. If you have a platform which can allow you to open accounts and not really check who you are allowing a opening for fraudsters. What do fraudsters use? Now, whether you did it on purpose or not, whether you looked the other way because you wanted to shore up your numbers, or whether you were lax, at the end of the day, you will be held accountable. And that's perhaps the Paytm story that we're seeing play out. I've run out of time. Mr. Parekh, thank you so much for joining us today. Amit, great to speak with you on NDTV Profit. That's all the time we have on this big story, but we'll be tracking the Paytm saga right here. Stay tuned.